Okay, so the new space economy? It's going through a major shakeup. After years of just explosive, speculative growth, the whole landscape is shifting, and shifting dramatically. So let's dive into what's become a really turbulent, but honestly an incredibly exciting new era.
First, let's get some context. You know that wild venture capital party that basically defined the early 2020s? Well, it's over. By 2025, investment levels were, recovering a bit, but still way, way below that crazy peak we saw in 2021. The market got a serious dose of reality, and investors, well, they started getting a lot more disciplined with their money. But right in the middle of this market cooldown, one company's story is just fascinating: Redwire. In late 2025, its stock stumbled, and I mean hard. Then, just 2 months later, it absolutely skyrocketed. So, how on earth did one company pull off this incredible turnaround in such a tough environment? That's the story we're going to unpack today.
To really get what happened with Redwire, you've got to understand the new world they were suddenly living in. 2025 wasn't just another year for the space industry. It was a total reset.
And listen, we're talking about a massive industry here. The Nova Space report pegged the global space economy at a staggering $626 billion in 2025. There is a huge amount at stake.
And you know, the language the experts used is what's really telling here. They didn't see 2025 as just a small change. No, they called it a decisive shift. It's like the old playbook was completely thrown out and a new one was being written in real time.
So what's in this new playbook? Well, it basically comes down to 4 huge shifts. First, defense suddenly became a primary driver of everything. Second, nations all over the world started prioritizing space sovereignty. They wanted to control their own assets. Third, like we saw, investment pivoted from just speculative bets to disciplined strategic moves. And fourth, key technologies like reusability and AI finally started to mature. These right here became the new rules of the game.
Okay, so how did all this play out for a real company, on the ground? Let's zoom in on Redwire. Their journey through 2025 and into early 2026 is a perfect case study of a company that was forced to adapt or risk getting left behind.
And their year was, well, a tale of 2 completely different stories. On one hand, if you were just reading the headlines, things looked pretty bad. A $97 million net loss in 1 quarter, missed expectations, and a stock price that was tumbling. But if you dug a little deeper, the company had these hidden strengths: a really strong book-to-bill ratio, which means more new orders were coming in than they were billing for, record liquidity, and a backlog of future work that was growing to $356 million. A very, very confusing picture for anyone trying to figure them out.
So what was going on? What was causing this disconnect? Redwire was really clear about it: delays in U.S. government contracts. And that ties directly back to that shifting macro environment we were talking about, where government processes and defense priorities were all in flux, creating a ton of uncertainty for contractors.
But this, right here, is where the story gets really interesting. Redwire didn't just sit around and wait for the market to get better. They saw the writing on the wall, and they made a huge, decisive, strategic pivot.
And this 2-step move they made, it just brilliantly shows you their new strategy in action. First, they went out and acquired Edge Autonomy, a company that specializes in uncrewed aerial systems. That move instantly transformed them into an integrated space and defense company. Then they reorganized their entire business around 2 core segments: a space division and a defense tech division. This was a direct, clear response to that new market reality where defense was king.
And get this, they didn't even stop there. They also started hunting for completely new ways to make money, forming SpaceMD, a new venture to use their microgravity tech for pharmaceutical research. It was a really bold move, and it showed they weren't just playing defense. They were looking for totally new ways to score.
So, the big question, right? Did this super aggressive pivot actually work? Well, the market's response was dramatic, and it was swift. This is the part of the story where we see that tumble transform into a spectacular liftoff.
I mean, just look at these numbers. It's kind of wild. After that painful drop in November, the stock surged nearly 38% in December, and then it rocketed up another 44.5% in January. The turnaround was just undeniable.
So what lit the fuse here? What caused this massive surge? Well, it was a perfect storm of factors. On the outside, there was all this excitement building around SpaceX's planned IPO, and that lifted all space stocks. Internally, Redwire announced a new, multi-million-dollar contract for their docking systems. And crucially, their pivot towards defense aligned them perfectly with favorable geopolitical trends, which led to a bunch of bullish analyst ratings. But there was one more absolutely massive catalyst.
And here it is, the big one. Redwire was selected for the Missile Defense Agency's SHIELD program. Now, this is a contract vehicle with a potential value of up to $151 billion. This single announcement showed that their pivot into defense wasn't just smart, it was putting them in the running for some of the biggest contracts on the entire planet.
Now, it's really important to get what this type of contract, it's called an IDIQ, actually is. It's not a guaranteed $151 billion paycheck, not at all. The best way to think about it is like a license to compete. It gives Redwire the right to bid on all the future work within that massive program. So it's a ticket to the big leagues, but they still have to go out and actually win the games.
Okay, so let's zoom out for a second. What does Redwire's wild ride tell us about the road ahead for the entire space industry? Because really, their story is like a miniature version of the entire sector's transformation.
This table really just sums it all up, doesn't it? We've moved from that old paradigm of speculative expansion, fueled by a crazy VC boom, to a new paradigm that's all about disciplined execution and a laser focus on profitability. Companies aren't just building cool standalone tech anymore. They're integrating capabilities, they're consolidating, and they are aligning themselves much, much closer with defense needs.
And this quote from that Novaspace report, it just hits the nail on the head. It says growth is now driven by consolidation, integration, and closer institutional alignment. Redwire's story illustrates this perfectly. They consolidated by buying Edge Autonomy, they integrated by creating a new defense division, and they aligned with institutional defense priorities. They basically wrote their own chapter in the new playbook.
And all this really leaves us with one big question to think about. In this new, more mature space race, what actually matters more? Is it the bold, speculative vision that defined the last decade? Or is it the disciplined, strategic execution that seems to be defining the future? That's the challenge that every single company in the sector is facing right now. Thanks for joining me.